and we still got beat out because someone offered 650 cash.
How much is that? Triple?
650 cash. That's almost $65,000 over the list price, and they're paying cash. If you waive the appraisal contingency, that means if the 595 property appraised at 570 and you made an offer for 625, you're paying that gap out of pocket from 570 to 625. So you're coming out of pocket $55,000. And most cases, people don't have that money just sitting around, just overpay for a property. The reason why people are overpaying for properties right now is because there's low inventory and the demand is so high that people are getting desperate. And they feel like, why rent when I can pay for my own mortgage? And even rental prices are super high. Yeah, so waiving the appraisal contingency is very dangerous. People are still doing it. Waiving inspection, people are still doing it. Some people are even writing offers cash, but they're getting a loan. You can do that, but it's risky because you're still obligated to buy the property if you get denied a loan.
I have a question. Don't you think it's dangerous people paying way more than the actual value of the house? If it's worth 500, it's valuated in 500. You're offering 600 just to go there and get the deal. Mm-hmm. Don't you think this is dangerous?
There's always a level of risk when you buy something, even if it's an asset like real estate. Yes, in regards to buying something more than what it's worth, it's never a good financial decision. Depends on your situation. If you're buying it for investment purposes, like I have a lot of clients who buy Airbnbs, that property would yield them $7,000 to $10,000 a month on Airbnb, and their mortgage would be around $4,000, $5,000. So they're going to be making $2,000 to $5,000 profit. So it makes sense for them to overpay. If you're buying for a personal residence, a primary residence, depends how long you're going to live in it, right? If you live in it for more than 5 to 10 years, then it doesn't really matter, right? Because the appreciation is going to catch up to your purchase price eventually. If you're buying it for something temporary like 2 years or 1 year, or you're just shopping around for work because you got relocated, I would rent.
I have another question. Who are these people buying these expensive homes cash? Are they first-time homeowners or are they investors? Who are buying these properties with these crazy offers?
Majority of them are investors, not first-time homeowners. If it's a first-time homeowner, they probably got an inheritance, won the lotto, or using their money from COVID-19, the EIDL and PPP loans for the wrong reasons. Or maybe crypto investors. You never know. People make a lot of money in the stock market last couple of years and also in crypto. So it could be their first property that they're buying. But the majority are investors who are savvy. Obviously, they're spending a lot of money because they know what they're doing. And a lot of them are just parking their money in different states, like Florida's no income state tax here. So if you're in New York or in California, you want to park your money where you can get the most bang for your buck.
What is this no income tax estate? What does it mean?
So basically, you're not taxed on your income. For example, like in California, you're heavily taxed. It's almost like 50% income state tax over there. Over here, you can pretty much write it off. So we're a red state. So we're pro-business. So a lot of people who are coming from New York, from California, from Canada, from Chicago, they have all this money that they made and that they have to be investing in parking.
But how a barber can compete with those investors? Let's say I'm a barber, I'm making $80,000, $90,000 a year, and I want to buy my first house. How can I compete with these big sharks coming and buying all the homes?
If you have the time and the power and the situation to wait to see if the market cools down. So I was thinking about this the other day, and the current real estate market and where I think it's heading in the next 2 years, the first one right now is interest rates that people have to look at, right? The Federal Reserve has been pushing aside raising interest rates for a few years now, but with inflation being so high, they need to figure out a way to cool the market down, right? So in March, they announced that they're going to be raising interest rates about 6 to 7 times this year. If you're in the market right now, if you're watching this and you're in the market right now, you're already experiencing this. Your rate went from like 4% to 5.5% overnight. And that's actually hurting people. They thought they can afford one thing, And for example, they're looking at 500,000 or 400,000. And now with their rate being bumped up so high, that pre-approval that they had, they can't afford it anymore. They have to drop down in price, right? So I think that the second thing is, with higher interest rates, you're going to have less mortgage applications. With less mortgage applications, that means less buyers in the market. And the decrease in buyers in the market, you're going to have more inventory pop up. When more inventory pops up, like more properties for sale, you're going to have sellers competing in price. So that's when I'll start seeing, or when everyone will start seeing, a stabilization in price. And you'll have less competition with buyers if you're still in the market. I think that's the best time to buy, when more inventory pops up. But the catch is, you're going to be paying more in interest as well. So if you can handle that, because interest rate really matters if you're looking at a 30-year mortgage, but interest rates doesn't really matter if you're looking at, if you're going to be in the property for 5 years, right? You're not paying the entire, $400,000 that the amortization says at the end of the 30-year loan. You're actually just paying a small amount of the interest over that 5-year period. So sellers are going to get a FOMO. They're going to have FOMO, and they're going to start putting their houses on the market because they don't want to miss out on this hot market. And you're going to start more inventory pop up. I think it's going to happen this year. And I think that would be the best time for you to jump on something if you haven't already. So to answer your question, to compete, you can't compete unless you change or compromise on what you're looking for. If you're being unrealistic and you want something, usually when you want something, someone else wants that too. And you're not the only person in this world, so you don't know. Other people have different financial situations. If you're having trouble finding something that you like, and you are placing offers and you're not winning, either change your realtor. I'm just kidding, or change your terms, be more aggressive, or look somewhere else, somewhere that was a plan B or a plan C, and compromise that way.
Great explanation. Look, from time to time, I see depressions, right? So those people, they are buying for this amount of price. That's outrageous. What is saying? Pricing in buying a house or a property right now, like happened in 2008. So from time to time, there's a depression. You think there's a depression on the corner?
You mean recession?
Depression. Oh, recession. Recession?
Yeah. They
keep
saying
I don't think we're gonna have a Great Depression like 1929. But
it's recession.
Recession.
Recession is a possibility.
Recession.
I would not rule that out. There are a lot of talks about recession, and the economical data that we receive and that we hear and that we read on CNBC and any other articles, there's a lag period of 3 to 6 months. So we won't know that we're in a recession until 6 months, until we hit that 6-month mark. So, for example, we can be in a recession right now, but we won't know until June. Or we can be in a recession in June, but we won't know until December. And if we are in a recession, I think we won't be in a recession like we were during the housing market in 2008, because that was a housing market that we had because of the mortgages at that time. They were giving mortgages to everybody. They were giving mortgages to people who had no income, no credit.
I remember.
And people were buying properties left and right. And that collapsed. And that was just trickling down to everything else in the market. And we had a recession because of that. And then right now, we won't have a housing market crash. We'll have stabilization, I believe, where the property values are going to be maybe taking a little dip. But I don't think it's going to be a dip where it's going to be that much more helpful. And I think we need that because we need things to cool down. We need people to stop going crazy. The whole reason why people were coming down here is because the whole mandates and the COVID-19, and they felt like, one, they didn't want to deal with the mandates in other states like California and New York. There was people going crazy over there. People were moving out. And secondly, people just started to realize that there was so much more opportunity in Florida with the tax situation, et cetera. So I think that to answer your question, that this is the perfect time to be investing in real estate in South Florida if you're looking for something that's going to benefit you in the future for sure.
Great.
Yeah.